let's be very clear. Deadpool provided the financing for his empire right now. He even said it. He was at the can line at Festival last year. He said, we use some of that Deadpool money to buy Aviation Gin, their minority stake. So he refers to it as that Deadpool money.
All right, welcome to another episode of No Investment Advice. We've got the two NIA boys here today, Trung Phan, me Master Flex himself, Bilal Zaidi.
I gotta give the energy for Jack, right?
There we go. Little shimmy. But yeah, unfortunately, Jack can't join us today. He's in, I don't know if we're allowed to say what he's doing. I'm sure people,
Jack,
it's not like a big
Jack's
secret.
busy, people. If you done seen Jack, well, what we're sad about is we're missing out on Jack's story. His Visualized Value Twitter account got hacked. It was pumping fake NFT things.
I know, man,
Jack's
crazy.
on top of it fast, though. He was on top of it. Everybody was treating the community, was trying to get it fixed ASAP. Blah, from what we understand, it's all fixed now, right?
I think, he said it seems to be fixed, but yeah, it was probably a terrible couple of days for him. But anyway, yeah, he unfortunately can't join today, but we'll be filling in for him, us too. So we got a lot to talk about today. There's a lot that happened since the last time we recorded. So in full transparency, we mentioned this, but last episode, which thanks for all the feedback, people seem to enjoy the more evergreen philosophical chat. But we did record that the week before because Trung was going to be out last week. And then we obviously didn't cover all the Silicon Valley Bank stuff, and it's kind of past now. So we'll touch on it a little bit today, but really kind of the biggest story has been Balaji's $1 million Bitcoin bet and the potential collapse of the global banking system in a worst case scenario, hyperinflation. We're going to get into that today. So that's kind of the big story this week. And we're also going to be talking about Reynolds. Some people are calling him the new Richard Branson. I mean, I
saw Dari, the other Twitter, it's actually one of my favorite Twitter follows. He wrote, Ryan Reynolds is the white Jay-Z.
No way. That is so good.
Dude,
that is so good.
He's funny,
well, he
man.
sold
a
gin brand and now Mint Mobile, right? So
so we'll talk about. You're thinking he's such a boss. He sold a mobile virtual network operator, an MVNO, for $1.35 billion. I mean, that's not the full story. We're gonna break down for the listeners how much Trung Phan thinks he made from that deal.
All right, cool.
Other than that, so the Balaji, hyperinflation, Ryan Reynolds, and the other stuff we don't have to do. Is there anything else you wanted to talk about?
We'll start with those two, but we'll see if we get time. We can cover some other bonus.
We can just do some fun life stuff we've been thinking about. It. Listen, you brought it up about the single episode, the philosophical ones. Well, I re-listened last week. I was laughing so hard when Jack, one of them was rambling. It might have been me or Jack, and we're just like, oh man, this is what happens when you just let couple dudes just talk on a podcast.
Yeah,
right?
It was good. Yeah. We were just talking about life. Yeah, we got some good little clips from that one as well. We got the spotlight effect.
The one I shit myself with yours when you're going on about trees. Listeners, I don't know if you remember this part, but we clipped it.
Oh my God, it's
good.
on
YouTube short. So shout out to Rafa,
our new
video
editor,
podcast editor, killing it for us. And Bilal was just talking about trees, and then at one part he literally just went, man, that tree, that looks fucking fire, dude.
Yeah, it was the most meme-worthy. I was, part of me knows it was a ridiculous thing to say, but part of me was like, it's a perfect thing for the internet where some people...
But it's also honest, man.
It's also honest and true. It's a true point, but it's also one of those things where you hear it out of context, you're like, what is this guy on about? Is this guy high right now? So I was hoping for some crazy comments on that one, but yeah, it seems to be doing all right. We put on TikTok and shorts and stuff. It looks like it's doing all right. So anyway, Trung, before we get to that, you've been on some fire with these memes, man. Let's pull one up here. This is definitely meme of the week. Let me just share my screen. A few people have been stealing this one, but
no, when we talk about the dopamine drip. This is what we talk about, people.
Look at it, almost 20 million views, 19 million views,
so,
8.7.
why don't you explain what you see here to the listeners?
Yeah, so for people listening, which is probably most people, so this is Trung's tweet from a few days ago.
Saturday.
For Saturday, an outrageous LinkedIn work history. And if you go all the way back, it's a Theranos research assistant, then sales business development at WeWork, then fun employed, took a year off because look at my prior employers, of course. and then account manager FTX, and account manager SVB, Silicon Valley Bank. So let's break this one down, because this one obviously, like, this is a meme template we've seen before.
Yeah,
I've seen you do it before. I don't know if I'm assuming you didn't like come up with that meme template, but
yeah, of course, it's a fake LinkedIn profile. Like
it's a fake
like,
LinkedIn profile.
This is a thing, right? It's a total thing. But I'll tell you a couple reasons why this went absolutely bananas.
Yeah.
So I know our listeners appreciate the inside baseball. So that had 160,000 likes and 20 million views.
That's insane, man.
And
damn.
And I think 80% of people didn't realize that it was a joke. So actually, I made one mistake with the Photoshop. So it wasn't Photoshop. The listeners are going to laugh. I redid my LinkedIn profile so it could look like that.
No way, that's hilarious.
And it's really annoying because now I have to like put all my old stuff back.
So people are on there probably getting notifications like Trung Phan has changed his, started a new job, and then they get the push notification.
Yeah,
that's
Trung
hilarious.
Phan started at SVB. Trung Phan started at FTX. So, but then if you look at the photo, you can see the editor pencil where the icon. So some people, like the really smart ones, like Ramp hit me up. Ramp's like, dude, this is fake, right? Because he knew, right? Like the OG meme guys know. But it looked like, because it was real enough, and sometimes, I mean, the gut reaction is like, this has got to be fake, right? Like you're feeling it, but some things are so absurd, and you're like, okay, we live in 2023, and like the world is so insane. There's even my mind, I think I tricked myself.
It literally could be real. Yeah, that's the crazy. That's what makes it funny.
I thought, let me ask you this. As with these, when you're making these fake profiles and you kind of get these really into it, like I thought the account manager was like, for me, that was just ace. Like I read that, I'm like, this, because account manager is like the most generic job ever, right?
Yeah. I've been an account manager. It's 100% me. It's like basically 90% of jobs on the business side of Google, some form of account manager. They just give you a better title, like relationship manager, agency, blah, blah, blah manager. And it's like, you're managing external relationships. That's basically what it basically means. But yeah, incredible. That is top notch. But I'll also say, go on.
Is that what account manager? I've never been an account manager.
Oh yeah.
What is the responsibility of an account manager?
Oh yeah. Normally, it depends on the business, the style of business. But normally, it is like someone who's managing a book of business. Yeah. That is normally like existing companies that work with a company already. So it's normally a sales role. And it can be a super junior role. It can also be kind of a senior role in different parts. The other thing is regionally it's different as well. So like for example, account executive in the US was more senior than in the UK. Account executive was like the first job on that thing. So
account executive is
in like an agency or a sales job in like a network or something like that. Google, we had something similar as well.
You know what's funny? Account executive sounds so official. It's like, I'm an account exec. I'm like, bro, well, what are you executing on? Okay,
so executive for what? Yeah.
So would they have account managers at SVB and FTX?
Probably,
I imagine they would,
probably.
Right?
Yeah, because FTX, well, I don't know if they had anything, to be honest. They didn't even have an accountant, bro. So, I mean, SVB, they probably would be, managing a book of their, clients or whatever. So that's pretty much, that's perfect,
but hold
bro.
on.
That's perfect.
Can we follow up with the second?
I think the research assistant to sales biz, that there is a bit of a progression here. And then it looked like they were stagnant. They didn't really progress in their careers.
That's why you pull up my second. So let me explain the psychology here. So I made a mistake. I tweeted this out when I had guests. This is how sick I am. My wife is like, please, Trung, can you just put your phone away for 4 hours? We have family friends and their kid, because we're really close to this family that has a kid the same age as my kid. And they're like, they came over and my wife's just like, Trung, just put your phone away, man. I'm like, yeah, okay, I'll put my phone away. But I sent this tweet 30 minutes before they came.
Oh my God, what a mistake.
Within the first 5 minutes, if it goes nuclear, I had like 1,000 likes in 5 minutes. I'm like, this is going to be a banger.
Oh, yeah.
And like, and so like.
Your face right now is so excited. No, it's a banger.
I know. So I put my phone away, but I left it upstairs, and we were hosting them downstairs, and I was there, but I wasn't there. You know what I mean? I was present. I feel you. But I wasn't present. Yeah. And that was pretty bad for the first hour-ish. I felt bad. But I also got hammered, so I totally forgot about the vote. So
that's what you're doing. So here's the second one.
Okay, can you read through
Trung.
the...
All right, so it's the same person, and now they've got a new job, senior account manager at Credit Suisse. March 2023 to present, 1 month. Back on my feet at one of the world's largest and most stable banks. Just moved to Zurich and start on 3/20/2023. When I saw this, I also, because I was like reading it early in the morning or something. Yeah, well, no, I can't remember. I was like in bed. I remember reading this, and I was like, wait a minute. Oh, it's Europe. Did he do the date the wrong way around? And I was like, no. He actually did the right way around because it's US to Europe. But that was me overthinking that one. But yeah, this one caught on fire.
There was so
too
much juice on the previous tweet. I'm like, I got to keep this party going.
Oh, yeah.
So the next day, Credit Suisse obviously is in a forced sale with UBS, which we're going to talk about. But anyways, I added that Credit Suisse job. And then again, like 80% of people were like, this can't be real. And then now I'll just fess up. Following that tweet, there was a DM exchange I had with somebody. Like somebody, quote unquote, DM me and said, hey man, like, can you stop posting my profile? Yeah, that, come on, people, that's a joke. Clearly that's a joke. Yeah, read that. Bilal, why don't you read that?
Yeah, so this is a DM. Hey, Trung, I know you think it's funny, but can you stop posting my work history on the internet for internet clout? And then your response, wait, what? It's anonymous. It's definitely a troll. And then they're like, no, it's not. Check your LinkedIn. I just sent these numbers, 7645. Holy... we don't have to read the whole thing, but people get the idea. It's just... But yeah, I mean, bro, this was on fire. I wanted to ask you, we're not going to name names here, but this gets stolen, obviously, right? Even on TikTok, I saw there's like an AI generated. Do you see this?
Reddit. It hit every single social, yeah.
Yeah. So you said it was 18, 19 million views, plus another 2 for this second one, plus another couple from some other big accounts. So this has probably been seen like 40, 50 million. There's probably 40, 50 million views on this if you take all the different platforms.
I think I mean, the last thing I'll say about this is the ones that do really well, and this is going to be, it just hits everything, right? Everyone has a LinkedIn profile. Everybody understands that early career grind, right?
Yeah.
It just hits you. It's so visceral. And then everybody hates LinkedIn. And then everybody loves to dunk on corporations that go down. And listen, I'm not trying to dunk like negatively, but these corporations did some shitty stuff.
Yeah,
right?
yeah.
Not all of it was criminal
today,
fraud, but like they're responsible for a lot of negative things. And not everybody there is responsible, which is why I think people...
No, and I don't think anyone even seeing it as like you making that much fun of the people. It's just kind of a funny situation. Or it's not a funny situation, but the way you've put a picture on a funny angle to a bad situation, essentially. So that's a better way of putting it.
Yeah, just like a person that's like a total, like a force. That was my favorite, like the Forrest Gump of corporate scams. It's just somebody that was minding his own business. Like this individual, like you can just think in your head, it's like, wow, I feel this individual has been through a lot of corporate BS.
Incredible. Yeah, I mean, that's a great way of putting it. For the amount of lives that guy lived. And all right, so, well, anyway, let's get on to the juicy stuff. Bro, what has been going on with this Balaji situation? We obviously always talk about Balaji on the show. Legend in our world, in the tech world. He's definitely... Well, let's first of all paint a picture for people who don't know who he is, which is probably a small percentage of people listening to this. But who is Balaji, and why is he someone that previously we would listen to? And why is this bet where he said he thinks that in 90 days, Bitcoin would be $1 million? It's currently 25K or 26K.
Well, but I think you should tell more about Balaji's background, because I know that you've actually spoken to him more extensively.
All right, so I don't know his full work history, but he's set up many companies before.
I think he had CTO of Coinbase.
Because he sold a company to Coinbase, and I think he was there for a little while. That's when I first spoke to him. I think it was at earn.com or something he had. Yeah. But before that, he had some sort of like, what was it, biotech or something, some sort of company, 9-figure
biotech,
exit, I think. So super accomplished guy, PhD, I think.
Also venture capitalist at Andreessen Horowitz.
Venture capitalist at Andreessen Horowitz. So he's, as we have referenced on the show, is what he calls post-economic, which is the most baller way of saying, I'm rich, bitch. I don't need to keep working, or I'm not motivated by money, is essentially, which is actually quite key for this story, because we're going to get onto his motivation, because some people have been trying to call him out saying he's trying to make money from it, which I don't think that's necessarily the case. I'll explain why later. So he's a very, very smart dude. And then he's also been really well known in, I guess, January 2020, before the world blew up. He was one of the early people that publicly went on Twitter and said, basically word for word what ends up happening. Lab leak, which initially was like laughed at, and eventually we've all come around to seeing that was probably the case. He talked about people are going to have to wear masks. Basically a lot of people laughed at him and said, you're out of your mind, this is never happening, there's no global pandemic, and that's what ended up happening. So he's done this a few different times, and he essentially goes online recently, and he basically says, oh, do you want to take over from here? What he basically said from here?
There was an anonymous Twitter, I think it's an anonymous FinTwit Twitter account. If I'm wrong about that, apologies. And the Twitter account basically says something to the, hold on a second here. Yeah, a pseudonymous Twitter account. And this is the bet they made. They had an interaction on Twitter, and the bet is around this. Is if in 90 days Bitcoin is worth $1 million, then Balaji will get the money from this bet. And if Bitcoin is worth less than $1 million, then this other pseudonymous Twitter account, a FinTwit, a pretty well-known FinTwit Twitter account, will get the money. So the break-even point is the $1 million is where the bet's happening. And the reason why this bet is happening is because Balaji is talking about the threat of hyperinflation related to the recent Fed rescue, the FDIC rescue, the U.S. Treasury rescue of Silicon Valley Bank.
Yeah.
And it's not specific to that bank because there actually is a larger issue at play here. And the issue he's bringing up is that over the past 2 to 3 years, the number of treasuries and mortgage-backed securities that have been purchased in the U.S. Treasuries that have been purchased, those have lost a significant amount of value because they were purchased in a low interest rate environment before the recent rate hike cycle, which began last year. So Balaji's framing is basically the U.S. government responded to COVID by pumping a ton of money into the economy, and then they kept issuing debt, and they knew that people. Well, I guess his framing is that they knew that people would buy this debt and corporations would buy this debt. But then, if you raise rates aggressively, you're basically selling an asset that is guaranteed to be financially or valuation-wise impaired until the end of the life of that. Because a debt instrument can lose value during its life, but by the end, it's supposed to be repaid, right? So,
Trung, just to clarify, so you're saying, so I understand this correctly, we know at the beginning of the pandemic, we obviously printed a bunch of money. There's more liquidity. There's basically 0% interest rates that we've talked about on the show a million times. Yeah. And as we then ended up hitting really high inflation, what happened there is in that time, when there was all this liquidity, a lot of these banks, including Silicon Valley Bank, they were holding tons of money, right? Because there was more money in the system. People get their, maybe not for Silicon Valley Bank, but for a lot of normal banks, their stimulus checks goes in the bank. There's a higher amount of money that goes into those in those deposits. And so now you've got all this money, and banks make money by essentially lending it out or, investing that money. And they buy these long-term, treasury bonds or whatever. And when interest rates go higher, the value of those bonds now start to go down, right?
You're 100% correct. You nailed it. And but the key thing to note here is that the value of those bonds that are held on the books go down as it's called duration risk, right?
Yeah.
So the longer the bond is, let's just do a dummy example.
Yeah.
If you were Silicon Valley Bank or you were Bilal Bank and you bought a 10-year treasury or 10-year mortgage-backed security that was yielding whatever 1% in 2021, early 2021, okay, well, you presumably will get all your money back by the end of that 10 years plus the interest, right? However, anytime between year 0 and year 10, if the interest rate environment changes, the value of that bond will go down. And it's for a very simple reason. Because if you tried to sell a 1% yielding bond on the open market in 2023, which is now, but the standard interest rates are 45%, no one's going to buy that for you unless you give a big discount on the bond, right?
So you'd be selling, instead of I bought it for $100, I might have to sell it for 80 now.
Yeah,
or
because I could just go right now and get it from the government at 5%, right?
Exactly.
Exactly. So basically, there's that level of valuation impairment of what they call unrealized losses And Bilal keeps on putting out this one chart, which comes from the Fed. And it was from earlier this year, and it says that there's over $600 billion in unrealized bond portfolio losses.
Crazy.
And Balaji's position is basically the U.S. government created this problem, and then they sold to the market something they knew would be impaired valuation-wise, at least before the end of the maturity of the debt asset, because they know they're going to raise rates, right? So he's basically saying, like, it'd be like if in a way, it's almost like a Ponzi, not necessarily a Ponzi scheme, but like you're dumping something on the market, right? You're dumping something that you know the valuation will take an unrealized loss until the end of that term because you know you're going to raise rates. And again, we don't actually know because we've joked about it here, right? Because like the Fed's like, hey, you know, inflation's transitory. Like but they made a mistake. Whether or not it was intentional or they made that mistake unwittingly, the whole point is that they sold trillions of dollars, the U.S. government did, and then related entities sold, because like mortgage-backed securities are backed by the U.S. government, right? These agency-backed mortgage-backed securities. What that means essentially is like they'll be backstopped by the, you know, Fannie and Freddie, which are the big housing-related agencies in the United States. So the TLDR is Balaji believed that the U.S. government was selling an asset that most likely they knew would be worth a lot less before the end of the maturity term. And he's basically saying what that's actually created is it's essentially pumping money into the system. Yeah. And he made this bet around the idea of hyperinflation, right? That's why he said Bitcoin $1 million.
Got it. And so we'll come on to that in a second now. So just to finish off, because again, we're not going for the whole Silicon Valley Bank thing, but the key point here is what ended up actually happening is, you know, people started wanting their money back out of the bank, right? So there's in a world today versus 100 years ago, you needed to go to the bank, line up, like ask for your money, get it in cash. And not even 100 years ago, honestly, like 25 years ago, if you go to like Argentina, this is what would have happened. And then what happened was essentially what is called a bank run. So many people wanted their deposits back that they don't have that money anymore. We've probably heard this story on this podcast before because we've covered it in the crypto world. This has happened a few times. There are obviously differences, but it's a similar problem. And
well, the problem becomes a problem. Again, we're not going to walk through SVB because I know at this point it's been widely covered. But the point is when you have these long-term fixed rate bonds, which is what like SVB bought these bonds. So they got a 10-year bond instead of call it a 3 to 6 or 1 or 2 year, like a shorter duration bond, because they wanted a little bit of extra yield, right? Now, mind you, this extra yield was in the hundreds of millions of dollars, but that's just essentially that's free money. As long as it's a low interest rate environment, it is a smart move.
And everyone isn't taking their money out; they can just keep it running. And it's not like FTX or one of these other crazy crypto things where they were investing in crazy, you know, high risk stuff. This is like on paper one of the least risky things.
It's supposed to be the least risky things. The misjudgment they made, and this is true misjudgment though, is in 2018, the SVB basically lobbied the U.S. government to allow themselves to not be classified as a systemically important financial institution. What that basically means is that they have less restrictions on the type of assets they can purchase, right? So like they're not blameless here, right?
They can be more degen, as we would call it.
Exactly. The equivalent of degen for a regional bank portfolio manager,
which is getting 1.5% 10-year bonds. Yeah.
So that's basically what happened. And SVB didn't have a chief risk officer for all of 2022. So this is covered by a well-known finance subsite called a Non-Gap. Non-Gap looked into the records of SVB and basically found they didn't have a risk manager. The previous chief risk officer left. I think she knew what was happening. She looked at it as oh, this bond portfolio is totally fine until they hike interest rates. And then our bonds are going to be worth nothing. And we're going to be technically insolvent. But, you know, the whole idea is in most traditional worlds, in our low interest rate environment since our financial crisis, you just kind of look at your your unrealized losses. And you're like, yeah, whatever. Yeah, we're just gonna muddle along until it's held to maturity, and then we'll just get all our money back, right?
Yeah, exactly.
But like you mentioned, you don't anticipate like how quickly. But SVB is very specific too, because it caters to tech and startups, which are all on Twitter. And they all talk to each other. So like it's a coordinated. It's not coordinated, but it's like how
you
quickly.
Tell your friend, and your friend goes and tells the group chat, and then people are taking out 40 billion. Was it 42 billion in one day?
Well, it's like Sam Altman tweeted if it was called the Santa Clara Farmers Bank, like there wouldn't have been that same. Fair enough. I'm not saying farmers don't use Twitter and Slack. I'm just saying they don't use it as much as VCs and
This
startups.
was fast moving. It was there was there's a digital nature to this as well. But I guess to move on from SVB here, let's bring it back to what's actually happening and why it's not just about one bank failing, right? This is about his theory. Balaji's theory is this is a widespread issue. All the banks in
America are holding these bonds,
They're
right?
all so it's
yeah.
There's hundreds of these banks, and then if you now zoom out to the world, he's saying that this is now going to be a global problem because now we're seeing with Credit Suisse, right? So
and everyone owns these like the U.S. Treasury is owned by every single major financial institution.
It's the world reserve currency. And so his bet is saying we're now moving out of a system where the US dollar is the world reserve currency, and there needs to be a thing that we transition to.
He thinks this will be a trigger. Yeah, he thinks that what's happening now will be a trigger to destroy the US dollar. Hence, the US dollar gets repriced in terms of Bitcoin, right? Which is what they always keep saying. It's like one Bitcoin is always worth one Bitcoin, right?
Yeah.
That's the idea.
And then just to clarify, he also says his bet is that it will transition to Bitcoin, but the fear he has is it would actually transition to the Chinese currency. And he thinks that would be worse for the world, which is a whole different discussion. So that's kind of where we leave off with Balaji's, actual
Let me enter
logic.
Actually Arthur Hayes.
This is great.
Yeah. So did you read the Arthur Hayes article?
I didn't read the full thing, but you can summarize it.
I would highly recommend listeners to read Arthur Hayes' piece. Because he
By the way, incredible, right? The way he writes is phenomenal.
Writer.
Yeah, I love it.
He's an incredible writer. Yeah,
controversial figure, by the way. We've referenced him on the pod before.
He had to cut a deal with the U.S. government. He ran an offshore exchange, and they were busted for something. I don't know the details of it, but I think he settled, and he's one of the main thought leaders in the crypto space.
Yeah,
and he actually touches on a very specific part of the Silicon Valley Bank bailout, and I think this is extremely important because Balaji has talked less about this, but it's also very related to why the U.S. dollar will potentially devalue, right? Or this risk of quote-unquote hyperinflation. I'll just say off the bat, I think the threat of hyperinflation, I get what he's saying. I think is quite low with the U.S. dollar. Not investment advice. But so here's what basically happened with the SVB backstop. And again, this isn't specific to SVB. This is a global financial situation here. So the Fed created something called the Bank Term Funding Program. So Bilal, I'm going to ask you, remember what we said? There's $620 billion in unrealized losses, right? Because these bonds, again, the dummy bond that we had was Bilal Bank had the $1 million bond that was due in 10 years, right? Today, if you bought that in 2021, let's call it's a 40% haircut. So you're down 40% on that bond, right? This is what the U.S. government did. This Bank Term Funding Program is if you had certain government or agency-backed mortgage-backed securities or agency mortgage-backed securities before the bailout they did for, not bailout, but the rescue they did for SVB, you can post that bond and get the equivalent in dollar terms.
Yeah.
So even though your bond technically on the market is worth $600,000 today, because we said it's a 40% haircut on the million, you can give it to the Fed, and what would they give you if you had $1 million bond?
Yeah, the full amount.
Yeah, they'll give you $1 million.
Yeah.
Right? So where's all this money coming from? So they basically are printing. They're doing the equivalent of printing, but in a roundabout way.
Yeah, in a different way.
Yeah, instead of. So typically, the
more
way
liquidity
that
either way,
you're putting money into the market.
Yeah,
exactly, dude. So like post financial crisis, the way they did this was bonds would get issued, and then the banks would buy them, the government would buy them, right? And then when the government's buying bonds, from the banks. You're putting money directly into the banks. This is another way of putting, like you said, money directly into the banks, but it's a little bit roundabout. And Arthur Hayes says it's actually a very elegant solution because it changes the mechanism. And they say that this bank term funding program is only supposed to be for a year. And yeah, but he makes the point of this though. It's set to expire in a year, but
Sounds
he just
like
says
PPE to me, bro.
Yeah, exactly. No, he goes, has there ever been like a situation where they've been given power and they willingly give it up, right?
Yeah.
Because what they've effectively done, according to Arthur Hayes' article, he ran the numbers. He says that by making this offer, and granted, not every bank has done it. Not every bank has to do it, right? Like JP Morgan doesn't have to go borrow against its entire loan portfolio because it has a very strong balance sheet. Well, we think, and it probably wouldn't have to go. A company like if this existed for Silicon Valley Bank, this could have tided them over because nobody would have been worried about their shitty bond portfolio because the depositors, investors would have known they could have gone to the Fed, posted all the bonds and got the money and paid out deposit if they had to, right? But anyways, Arthur Hayes says that this essentially creates $4 trillion of money. Like this is effectively if every bank wanted to post their bonds and get as collateral and get the
like
money
cash
as a
it
loan.
in, essentially, yeah.
Cash it in. Granted, you have to quote unquote pay it back, but you do. But you're creating cash, and I think already 300 billion has been drawn.
And sorry, could you say that? How many trillion? You say 4?
4 trillion.
And so could we put context around that? How much is that compared
I
to
think
how
the
much
U.S.
was...
money supply is 15 to 20 trillion. It's
So like, do
25...
you remember how much was printed in, let's say, 2020 and 2021, roughly?
About 6 trillion. 6 trillion.
Okay, so that gives us a comparison.
Yeah, the equivalent of COVID.
A massive amount, essentially.
A massive amount.
Money printed
and
goes
that,
burr
you
again,
remember
essentially.
That same, well, that's why he's been joking the entire...
Yeah.
If you go on Arthur Hayes' Twitter, he just says, money printed goes burr. And I'll tell you the interesting thing about this. And he's saying that, well, and we talked about it, right? It's because we know all these other governments, other central banks, other international banks hold U.S. treasuries. They hold U.S.-based mortgage-backed securities. This is the thing. The U.S. is exporting this policy.
Yeah.
Because, right?
They've
have
got
these
a swap
interest
line too, right?
Yeah, they have interest rate swap lines with other central banks. So like this, what is being proposed right now, like the European Central Bank could do the same thing.
Could you explain what swap line is for people like and how it relates to the Credit Suisse situation?
Well, I'll super simplify it is different nationalities and countries have different currencies, right? So obviously the Credit Suisse crisis in Switzerland is, well, they have the Swiss franc, but elsewhere in Europe, you have the euro, right? So what an interest rate swap line basically allows you is to borrow other countries' currencies and be less worried about the foreign exchange risk and all the changes. But what it actually does in this case,
it's basically a backstop, though, right? It's kind of the same they're doing for
because
the US
what's happening, because the threat for all these countries is if they lose value against the U.S. dollar, right? Because they have you nailed it. It's like all these countries have huge dollar-denominated debt. So if their currency goes to the shitter, they're like, oh, it cost us twice as much in the U.S. dollar to pay this than 3 months ago. Well, the U.S. government's basically saying, just swap with us. We'll do the swap line, and like we will basically be able to tide you over until the currencies are broadly equivalent again, or where they were pre-crisis.
But in principle, they're essentially like, I don't know if this is a correct comparison, but the equivalent of FDIC, the way we think of it as I can put money as a person in a bank, and if something goes wrong with the bank, I'm covered.
Yeah,
they've done the same for the US
giving
banks,
you a correction.
and they're
You're basically
doing,
allowing them.
Yeah.
No, you know this because there's so much foreign exchange risk when you're dealing abroad with international banks, right? It's especially in times of crisis, because money flees to primarily 2 places currency-wise when there's a crisis: Japan and the United States. Really, the United States now. So if there's a crisis, everybody piles into the U.S. government and the U.S. dollar, because for all the jokes we have and even this Balaji bit, today, the U.S. dollar, as we know, that's the fortress. That's where people go in hard times. And if people pile into the U.S. dollar, that means the U.S. dollar is way stronger versus all these other currencies. So this is what the interest rate swap line effectively does, is like, if there's a crisis and these other currencies are getting clapped, the U.S. government's being like, listen, we're going to give you a way
We
to
got
like not
you.
have to eat.
Yeah.
Not have to totally eat, like getting your currency destroyed and trying to pay back all these debt instruments.
So Trung, I guess so. That's really, really helpful context and summary. But let's move it on to what we kind of think about this, because I mean, first of all, the summary was we're essentially printing a bunch of money again, or we're creating liquidity, and we're backing, the U.S. banks and essentially global banks as well to not mess up the whole banking system, to give them confidence to say we're not going to let all of these crash. But the bet from Balaji, regardless of the $1 million bet, is really a meme. It's more about the meme of what he's talking about, right? And it's about this idea. He actually started this off by doing the bit signal, I think it was called, and he put out this tweet which was saying, I will be giving out $1 million to the 1,000 best tweets, memes, charts, whatever. That caught some fire, but it didn't get as much heat as the second one, which was the second round, which this dude, like we said, I'll bet you $1 million that won't happen. And that is what's really blown up, because it's a bit of a crazy idea, right? Because everyone can see that that's very, very unlikely to happen. And why would this person, if you don't know who Balaji is, you're thinking, why is this guy putting up $1 million to do this? So, and I just also want to point out, it's for the person who is betting that it's not going to $1 million, it's essentially a free bet, because if they buy 2 Bitcoin, they will either way make $1 million. So I wish I had seen it first, but yeah. So that's going to bring us on to like his motivation for doing this in a second, but curious to get your take on what are the good parts of his argument and what are the parts you don't fully agree with, and maybe we can start from there and I can share my opinion too.
Right. So the hyperinflation part is the first one that I would not agree with, because you have to remember the basis for his bet, right? He's saying that the system that the Fed has gotten the banks into, where they've sold them bonds pre-interest rate hikes, and then now there's this 600 billion plus in unrealized losses. He's saying that this could lead to the collapse of banks. And then the collapse of the banking system would lead to loss in trust in the US dollar, which is true. But I mean, Noah Smith, economist, great blogger, wrote a whole post about this bet. And he basically said, well, actually, traditionally, if you look at banking crises, they actually lead to deflation. And it's for a very simple reason. If all the banks crash, they're not lending credit to the economy anymore. So where's the inflation going to come from? Because the businesses are going out of business. There's no new business formation. The economy basically grinds to a halt if banks fail. But I think Balaji.
When has this happened before? Do you know,
the Great Depression.
What year was that? Just so we know again.
Well, 1929, 1930 is like, when you had hundreds of bank failures, there was deflation. It was a deflationary environment. It's because there's no economic activity because everybody's clapped, right?
Yeah, it makes sense. Yeah.
But to Balaji's point, I think the point Balaji's trying to make is like, okay, we'll think one level next. What's the next level? If the U.S. dollar, if the U.S. dollar and the bank situation is so bad that you're getting hundreds of collapses of banks, eventually that's going to mean the U.S. dollar is completely devalued, right? I think that's the next step he's trying to make. But the broader point he's trying to make is this. He's saying if you want to exit this system, which agree with me in the hyperinflation, don't agree with me, but I'm telling you, there's 600 billion that the Fed says there are in these unrealized losses, and that the Fed caused this to happen, whether intentionally or they walked into it. You should not have faith in this system where it is the central bank. Arthur Hayes brings this point up. Since the financial crisis, we are in a central bank-led world. The economies are trying to be fixed by central bankers using interest rates. Prior to 2008 and really through the 20th century, you know who tried to fix the economy? It was the actual government. And they would do it through fiscal policy, right? It's like, hey, we're going to spend money here, we're going to spend money there. This happened a lot during COVID, where the U.S. government, you mentioned it with kind of the loan program and like trying to get money into people's pockets.
And stimulus, yeah.
Yeah, so we don't have to go deep into it, but it's called fiscal dominance versus monetary dominance. So fiscal dominance is when the government is deciding how to deploy money
spending,
into the government. Yeah. Whereas monetary is when the central bank is actually really controlling levers, right? Yeah, the interest rates. It's like they're typically against, central bank's supposed to be independent, right? And like, I'll give you a very famous analogy. In the 1970s, Richard Nixon was heading into an election, right? The 1972 election. And he wanted to make sure he leaned on, to win, he leaned on the central banker at the time. I believe it's Arthur Burns, and he's like, "Listen, this happened to Donald Trump too, right? With Jerome Powell. You cut rates, you raise rates, you cause a recession into an election." And then this isn't directly related to monetary versus fiscal, but it's an idea of how they're supposed to be separate, and they kind of battle out for influence, right? But back to Balaji's point, if all these banks fail, that's not good. It'll cause deflation. But what does that mean?
We got bigger problems if it goes to that place. We've got a lot bigger problems than
he's
just the
basically
money
saying
supply.
Bitcoin is a way to opt out of this madness. It's like, this is madness. And let me do one name drop. Stanley Druckenmiller. When I got the chance to interview this legendary macro investor, he said to me, this is what he said to me.
He's essentially, for people who don't know who he is, he's like the LeBron James of investing.
He had 30 straight years of 30% returns or more. He famously, with George Soros, broke the Bank of England. That was a famous trade in the early 90s. But he said this. He's like, I never understood the value proposition of Bitcoin. He always thought it was kind of scammy. But he's like, in 2020, in the response to the COVID crisis, he's like, I understood the value of Bitcoin, truly understood it. He's like, it is a hedge against the Federal Reserve going crazy. That's what he said. Yeah. It's a hedge against the Federal Reserve going crazy. And just for explaining the reason that is, and for most listeners, they'll know this, is there's only supposed to be 21 million Bitcoin.
Yeah, it's a limited supply. It's the same idea of gold in the past, where the money...
Well, whereas gold even now has like a 2 to 3% inflation rate a year, where they keep digging it up out of the ground.
And the one thing I will say to this, the kind of interesting idea that we've talked about here was the meme in the 2020 and 2021, I guess, where inflation... First, it was about the Bitcoin community was like, inflation is higher than they say it is, which, to be fair, they were kind of right about, right? Yeah. And then it became, inflation is only transitory. That ended up not necessarily being the case. Now, I think the big disconnect for me, where I've probably changed my mind on what had happened since, was the meme or the idea of Bitcoin being a hedge for inflation didn't necessarily end up being true so far anyway. And we've had record inflation, and the price of Bitcoin did not, inflate in the way that you'd want as a hedge. Now, the jump where I agree. So I think, first of all, Balaji's thing, I think it's really cool that he's doing it. First of all, like, I think it's smart what he's doing. I do think a lot of people don't know him or haven't heard him enough, might just think he's like a charlatan trying to make some money because he owns probably like 100 million plus in Bitcoin himself. That's
right. That was the counter, right? It's like, he's bringing so much attention to this that even if the price of Bitcoin goes up by 1%, if he holds $100 million of the Bitcoin, probably holds more.
He probably does.
Gone. He's already broke even, right?
And so my personal opinion on this is, just without actually knowing him properly, right, is I don't even think that's the case. I think he genuinely is one of these like ideological people that, like engineers, if you ever like worked with engineers, like he's got that kind of technical scientific brain, which is there's almost a right and a wrong about this, and we need to move on to something else. I think he truly believes that. I don't think he's just doing this for like clout or like money, especially because I know he already has enough money. Like, that's not the reason he'd be doing this. Now, the part I do agree with him on is that he's bringing attention to something which seems to be a bigger problem than initially thought out to be. When we just see this one bank, especially because it's named Silicon Valley Bank, people already, in the wider press and general society already see tech as a negative thing a lot of the time nowadays. And so it's an easy thing to say, oh, well, they must have done some, degen stuff, which partly they did do make some mistakes, but partly they were also... I
love when you say degen.
Yeah. But essentially, it's not just them. When it ends up being 100, 200, 300, 500 banks that are all in a similar position, which might be the case, and then it's, the local bank, like you said, the farmer's bank, or the regional bank that has, the second order effect here is a lot of those local banks are where you get commercial real estate loans, is from what I've read as well. So that is another thing we can come to in a second. Then you're going to say, oh, it's not about Silicon Valley Bank. It's not about tech community doing something crazy. It's actually a banking problem, which we're already kind of seeing. Yeah. So I think he's definitely got some valid points there. I think the part I just don't agree with is that the word hyperinflation is a very loaded, strong word. It's loaded. You think of Argentina and Zimbabwe.
Well, actually, Bilal, I want to add one point. It's like, I just want to say this. sorry to cut you off, is like, it's
go
not
on.
just about Silicon Valley Bank, right? Look at all the other regional banks. All these other memes from First Republic. They took down Signature Bank, which is, I mean, there's this whole other part about these banks that, you know, worked with crypto that have been taken out. A lot of people think this is like a covert way to take out the crypto linked banks. I don't fully subscribe to that. I get why some people believe that, but there's clearly damage to a lot of non-major banks, right? The non-JP Morgans of the world, non-cities and non-BAMLs. But yeah.
Yeah. No, that's a great point. And then I guess the part I don't agree with, I think his logic where he shares in the tweet thread, or it's not even a thread, it's the long tweet, he makes a compelling case. Like if you actually take away the $1 million amount and you just think about the idea of things change very quickly, and they can, you know, in a digital world, things change quicker than you think. COVID was a good example of that. Like from 1 week, we don't believe this thing's a thing, to 2 weeks later, we're in lockdown, you know, or like a month later, whatever it was. So that is the kind of digital nature of it. We've seen even the meme stock stuff, like how that can work, even the Silicon Valley Bank, how quickly people take out money. Now, the example where what he's talking about is obviously higher stakes. This is governments, the world superpower, and it is convincing, like it needs to be a big country, like he said, India. Like if India starts transitioning away from the US dollar being their reserve currency, that is a big enough catalyst for a lot of these things to keep going. Now, so I think the example he gives is a plausible, even if it's a 0.01% chance of it happening.
Non-zero.
Non-zero. It's a logical take, I think, actually. I think the word hyperinflation, though, is kind of what is throwing a lot of this off. And even more importantly, the 90-day period is even more, like if you were a betting man, you'd look at like, oh, that was already a long bet, but now, with the 90-day time constraint, that's also going to mess it up quite a bit. So I would 100% bet against it if I could make $1 million from that. But I actually think he brings a lot of valid ideas to the table that are now being talked about. Like we're talking about it right now. So I think the value of him doing this is for people to talk about it. He's already won, exactly.
I agree with you 100%. I cannot agree with you enough that I think it's for the meme. I mean, and he always talks about memes, right? It's like in his Brooklyn Net Worth state, he gets it. Balaji understands memes. That's why every time he tweets something, it's like catchy. It's like a poem, right?
Oh, my favorite, dude, I wrote this down here, was it's Uncle Sam Bankman-Fried, not Uncle Sam. That was so good.
Right? He's trying to attack. Jack's talked about it. Jack Butcher, our friendly co-host who wasn't able to make it today, has worked with Balaji, or is working with Balaji for the graphics on our boy Eric Jorgensen's book about Balajiisms. So he knows how to frame an idea. Last thing I'll say about this, and this just gives credence to your idea that it is for the meme, it's quite simple. This is a losing bet no matter what.
Yeah.
If you were an individual, or as they say, if you're an efficient market man, right? And you're looking at this like purely from a financial standpoint, this bet makes no sense. Because if Balaji believes that Bitcoin would be worth $1 million in 90 days, he would just buy 36 Bitcoin right now.
Yeah, he would make more money doing that.
He would just buy 36 Bitcoin. So either way, he's losing out, because even if he wins it in 90 days, let's say Bitcoin's worth 1.1 million. Well, he's already lost 35 million. By not just buying the Bitcoin now, right?
Yeah.
And if he loses the bet because Bitcoin's under 900,000, then he lost $1 million. So like, it's literally a lose-lose bet, which means it has to be for the meme.
What would you say to the person who says, and again, I don't think this, I don't think his motivation here is money-oriented. Honestly, I think maybe it's a partly to do with it, but let's say he owns 100 million of Bitcoin plus. To me, he's not just trying to bet on this one individual, use case, or this one individual scenario, It's more about him creating the meme and creating the thing that moves it in that direction, speeding that up, right? If that's another take. And so therefore him moving the world through the idea of that meme and putting fire behind that meme to move things along towards a world where he might want that, or he will gain because he has 100 million plus in Bitcoin. That's another take on it, which again, I don't agree with that, but I think that is something where I could see the logic why he would be doing it for that reason. So I'm curious, what do you think his motivation is for doing this?
I think it's things that you've mentioned. He truly does believe it. He clearly has a platform, and I wouldn't call him militant, but he's quite militant about the things he believes in, right? And
probably a good word, actually. Yeah. For that.
Actually, his word. I mean, he wrote the book, The Network State, right? Like, he's become very interested in this idea of building new societies. Again, that's a loaded idea, but something he's very interested in, and the collapse of the U.S. dollar would bring ample opportunity. I mean, bring tons of chaos, but to build new societies.
Yeah. The last thing I was going to say on it is my thoughts are, I can understand the logic around the banking system being messed up, being too much printing, liquidity, whatever you want to call it, the devaluation of the currency. However, I think that big next step from we're transitioning away from the US dollar to something else, and then that happens to be the Bitcoin and not, the Chinese currency or, central bank based currency or whatever. Because to me, like, the US dollar is not the world's reserve currency just because it's a nice looking piece of cash, right? Like, it is because it's the world superpower. There's thousands of military bases around the world. It's the world's most powerful military.
Aircraft carriers.
Yeah, it's every part of essentially empire, right? It's the world's superpower. The world's empire essentially is the US, and that is why it's the world's the world's reserve currency. And so unless that is changing, I don't see it really. I don't know where that transition point would be, just from a kind of logic standpoint. Because if everyone is essentially devaluing the money, that's the part I don't fully understand. And I'd love to ask him or someone who understands it better.
Ask him.
Yeah, exactly. But if everyone is essentially, if all money is basically being devalued, then people can still just keep working, in their normal, the way that we're currently doing. And if the inflation goes slightly high, then maybe that's just what happens. But to then convince billions of people that Bitcoin is this thing that we're all going to save money in, I think that's quite a big jump. And I don't think it's so drastic. I think, if anything, a small percentage might move. Maybe another country would do it. Maybe more treasuries would put 1%, like we've talked about in the past. Even at that level, it would be a huge thing to go from $25K to $1 million for a Bitcoin in 90 days.
We're winning. We're standing till 69K, right?
Exactly. But I mean, again, I'm happy to be proved wrong if that is the case. I mean, I wouldn't be happy because we'd probably be in some sort of war.
Well, you gotta hold more. You gotta hold more BTC,
I know,
man.
that's true. Yeah. I still got some money
Not
stuck
investment
somewhere.
advice.
Definitely not. Yeah. So anyway, I think that was a really interesting discussion. Anything else we want to talk about before we move on to the Ryan Reynolds situation?
That was meaty.
That was
apologies
good.
to listeners if I wasn't as CFA fan wasn't as smooth on the terminology as he should have been.
No, I think we needed to get into that because it was wrapping in the SVB, the Silicon Valley Bank stuff as well.
Yeah.
And the Credit Suisse stuff is relevant. But I would love to hear people's thoughts, either on YouTube or Telegram, what your thoughts are on it all, why you think he's doing it, where you think it's going, because I'd be interested to hear people. Also, people have been writing some hilarious comments in the chat, by the way. That has been really, really fun. All right, let's move on to our boy Ryan Reynolds. I'll pull up a tweet that was our boy Austin Reef, founder of Morning Brew. He said he might be the next Richard Branson. I did like this take, just because any comparison to our boy Richard Branson is always a good one.
Well, why don't you tell the listeners, Mr. British Cat here, Richard Branson, the legend, the legend.
Yeah, the first ever, I think it's the first autobiography I ever read, actually. It's the first kind of book where I read on my own terms, where I was like, that was the first time I loved reading, honestly. It was quite late in life.
That just got clipped. This is the first time. Well, man, I read Richard Branson's biography, I gotta say, so really the first time I understood the magic of books.
Every first time I could read, yeah, exactly. No, I mean, I was at 14 or something, but still. So Ryan Reynolds, he sold Mint Mobile for $1.35 billion. Aviation Gin, you called him the white Jay-Z here. And I think that's a great take as
Twitter,
well. Yeah, Aviation Gin for $610 million. And also he bought Wrexham FC for $2.5 million, which we talked about on the pod. Really, that could be
football club.
a really big one. Exactly.
And he might buy the Ottawa Senators.
That's smart.
NHL team.
That's smart. Yeah.
Well,
so this guy is just straight winning. So what?
Yeah, he's winning.
Is he also Canadian, right?
Oh yeah, he's from Vancouver, baby.
Go represent. Okay,
Look,
cool. So
people, go check out his Twitter handle. Bilal, I want you to look at his Twitter handle right now.
wait, what's going on?
Tell
All
me
right.
what his Twitter handle says.
Wait, what is his Twitter handle? Is it?
You look it up. While you're looking it up,
I'm searching.
I'm gonna walk people through how Ryan Reynolds turned a movie career into being the white Jay-Z.
Van City Reynolds. There we
yeah,
go.
Van City Reynolds, people.
That's incredible.
Vancouver, Canada. So let me actually break through some Ryan Reynolds stuff because he's from Vancouver. I've been repping my boy for a number of decades now. I don't think you all remember how Ryan Reynolds got started in Hollywood or what his first breakthrough was. Do you remember Van Wilder?
Oh,
Dude,
bro, I've watched that film like 10 times.
Bro,
incredible. When I was a kid.
Wilder.
Was that Tara Reid, the one from
Yes, dude.
American Pie?
Yes.
That was my teenage film,
one of the
man.
most successful Hollywood entrepreneurs ever. Got his start as Van Wilder. This is like Joe Rogan selling the fleshlight in one of his first podcasts.
Yeah. Such a bad film that is good. It's like one of those dumb films.
Listen, it's a comedy. It's a level below the White Castle movies, but like they're still pretty good, right? He's funny. He's hella funny. And that's really come through in his marketing now. But so that movie comes out in 2002. He's a 26-year-old actor on the come up. Good-looking guy. Good-looking dude. We know Ryan Reynolds, good-looking cat. Because after Van Wilder, I don't know if you remember the mid-2000s when he just got absolutely swole for the Blade movies. Like, he was on the cover of every single men's magazine. He went on some crazy workout. So he did the Blade films with Wesley Snipes. He was in Blade 2, I think. And
I didn't even realize he was in that. Blade is classic. Is this after Wesley Snipes came out of jail?
I can't remember. I think it's before.
Cool.
So Blade is such a good movie. Blade 1 and Blade 2. And Ryan Reynolds was in number 2,
I definitely had that on DVD, man. Back in the day, I remember watching that.
That was a banger flick. So
classic.
that's when this is the reason we bring it up is because the first Deadpool movie comes out in 2016. That means Ryan Reynolds, this is his road towards comic book stardom. And let's be very clear. Deadpool provided the financing for his empire right now. He even said it. He was at the Cannes line ad festival last year. He said, we used some of that Deadpool money to buy Aviation Gin, their minority stake. So he refers to it as that Deadpool money.
That's incredible. Yeah.
Well, I'll tell you why I love his creative story, because we talked about it a couple weeks ago with the Quit episode. Just keep grinding. I mean, this guy, so he did the Blade films, had the superhero touch. People are like, oh, this guy, maybe he could be a superhero. So remember, Wolverine, 2009. He's in a Wolverine sequel movie with Hugh Jackman. This is where their bromance comes from. I don't know if you've ever seen it over the past 5 years, but Ryan Reynolds and Hugh Jackman, if you YouTube it, there's many clips of them just like doing commercials, like the mad bromance going on. It started with this Wolverine film. So Wolverine Deadpool had a really small part in this Wolverine sequel. And it was 2009, and people were like, oh, let's make him a superhero star. And this is Jack's chart right here. Never give up. This is not pointless. You keep grinding. So he actually he went to do Green Lantern, which is a complete failure. So Green Lantern did really bad at the box office. And I think it was a Green Lantern. I'm almost positive it's Green Lantern, 2011. But the Deadpool character has been known to be like a bit of a comedian. So he worked on that Deadpool character for almost 8 years to get it to market. And the film came out in 2016. Smash it. He understood that character perfectly. And 2018, 2 years later, sequel comes out. In total, he makes, with back-end points, $60 million plus from these 2 Deadpool films. That's where that cheddar comes from. I mean, I'm not saying he was poor before, but now he's rich.
Yeah.
And he took that money and put it into aviation. So they put into Aviation Gin, minority
how much
stake.
they put in? Did they ever
I don't know.
report that?
It's unreported how much put in. I'm assuming he put 5 to 10 million into both aviation and then in 2020, the same into Mint Mobile. But he basically learned what he calls it fastvertising. So the reason he calls it fastvertising is because he had to use that technique for Deadpool when they were marketing Deadpool. It's like, be on top of trends, break into the social media cycles, and now he's got 80 million socials followers across all his socials, right?
That's wild. I didn't realize that much.
And then we've seen over the past 2-3 years, like how quickly he responds. Like with Aviation Gin, you remember that Peloton Christmas ad with that girl? That was like, remember that Peloton Christmas ad?
No, I don't think I saw that. I don't
remember the one where the girl got a Peloton bike and then it was like really
I think
creepy?
I remember briefly. Yeah.
It was like a really unsettling ad, and got scared. 2 days after that Peloton ad comes out, that same actress was in an Aviation Gin ad. And basically,
I do remember that.
So Ryan Reynolds is just jumping on trends. When COVID hit, he made a mobile ad for the devil, basically launching COVID and then coming back to Earth. And then he even did a Bitcoin ad. You remember the guy that had lost a Bitcoin hard drive in the dumpster? Yeah. So Ryan Reynolds, when that news came out, he immediately made his own version of it. And basically, I saw a hilarious comment when I tweeted about the Mint deal, and it just said, white people in America love Ryan Reynolds. He could be president if he wasn't Canadian.
I mean, seriously, though, that's not a bad shout. I agree,
Well,
man.
the thing about Mint Mobile that's surprising, so for listeners that don't know the full details, so Aviation Gin, Bilal mentioned, was acquired for $610 million. So let's assume he had a 10% stake, right? So it gets another 60 mil there. Mint Mobile, I'm pretty sure he acquired, he owns 25% of it. I think he kicked in 5 to 10 mil, maybe not all cash. Some of it got equity for being the pitch person, just like he did for Aviation Gin. But yeah, the Mint one's crazy, man. These MVNO businesses are wild. So
how do they work? Yeah, I don't actually know much about this.
So like T-Mobile and Verizon have the base networks, right? And they'll let other companies
essentially have the infrastructure.
Yeah, and they'll let other companies like buy and build on top of their telecommunication networks because they have to, right? As part of building these telecommunication networks, the government requires that you allow other, they call it mobile virtual network operators. The interesting thing about the MVNOs is they make a lot of sense in the sense that Verizon and T-Mobile are going after it's easier from a brand standpoint. I mean, you understand this, man. Like Mint Mobile is a prepaid card. Prepaids are typically for lower income segments of society. And the reason that is because you know exactly how much you're spending, right? At postpaid, you get slapped with all these crazy data overages and phone overages. Whereas with a prepaid, if you run out of money,
you got to top up that phone.
The phone ain't working anymore. So Mint was targeting lower income consumers, lower income and or cost conscious. Because I've done prepaid before because I hate how telecommunication firms just gouge you, right? So
especially when you're international, I do that. I always get a local SIM, and I always get like I cap it like I'm spending $30 on this.
That's how they hit you up.
Yeah.
So Mint is owned by a company called Kanai Corp. I might be pronouncing that wrong, but they own Plum Mobile and so I forgot the massive they own 3 mobile carriers, and one of them is Mint. But the whole point being is like Mint was built on top of T-Mobile's network, and it created value as like a quote unquote startup mobile targeting a different segment that T-Mobile it wasn't in their expertise, or they didn't want to dilute their brand, right? Or they wanted a separate brand. So I did some napkin math. I think Mint Mobile is worth less than 100 mil when Ryan Reynolds bought in, and I did this based on other deals at the time and the subscriber base of Mint Mobile. And so if it's worth less than 100 mil, within 2.5 years, he probably doubled or tripled the subscriber base.
Yeah, 13x though. That's
exactly,
wild.
Dude.
What's the 100 million based on? I'm just curious what the napkin math is there.
So the math was this. When he kicked in, when he got announced that he was part of Mint Mobile, I believe this was in either fall 2019 or winter or the first few months of 2020, there was another huge MVNO deal. I believe Dish bought an MVNO for $1.3 billion, but it assigned basically a per subscriber dollar value. So that deal assigned a value per subscriber like $150. So that's
got it. Okay.
Yeah.
Cool. Nice, man. But yeah, I mean, and then he's got Wrexham F.C. I think that one is we've talked about on the pod, so we don't have to do it to death here. But that is also just a complete out of the box example of sports, because a lot of people will go and buy a big sports team, right? But going and blowing up a small sports team, making a TV show with Hulu, whatever it was, that's already like the amount. I mean, I don't know how much, what did they buy it for 2.5 between two of them, right?
Yeah, the other actors from Always Sunny in Philadelphia, right? The comedic actor.
Yeah. But let's say so they put 1.25 each in, or it might not be even, but let's just say that they put that. I mean, the Hulu deal alone must have got them that back. I'm pretty sure. I mean, just
oh yeah, dude. You know what? Why don't you walk through the why it makes sense to buy it and the media angle that we talked about?
Well, I think we talked a little bit on the pod, but just like one. You're directly creating a content business, essentially. Like you're creating something, creating content that you're now selling to, you know, Hulu, Netflix, whatever. That already is a new revenue angle that you just didn't have previously. And then more importantly, you're now raising the profile and blowing up that team. And you're putting more attention, more resources on it. So now they have a disproportionate chance of going up the leagues.
Because you're attracting players want to play with Ryan Reynolds.
Exactly. And you're like, oh, I'm part of this. I'm 21 years old. Okay, I can be here for 5 years. I'm investing in this project. Very much what's been happening at Arsenal on a bigger scale. So it's just like investing in the future, because that's the only way you can really compete if you think about it. Like, and just the smart part of it is just you're taking a completely like depressed asset, essentially, undervalued asset, or correct
mobile, if you will.
Yeah, exactly. And I won't even say a depressed asset really, because it's more just it was valued what it was correctly valued at. It just happened to be by you attaching yourself to it, you're blowing up that value exponentially. So yeah, I mean, I think it's really, really smart. Yeah, I think maybe we need to do another episode on sports again with either just us three, or maybe we'll bring on Joe Pump again, because there's so many interesting examples right now.
Joe did a tweet about Wrexham that Ryan Reynolds retweeted. He did a thread.
Oh, is it? Oh, yeah. I remember that. Yeah, actually. But incredible. Yeah. So anyway, really cool to see him doing that. He seemed like an incredibly smart guy, shrewd operator, and looks like he's having a good time, man. So we're all for that here. Anything else on
City that? Reynolds.
Van Wilder, our boy. Yeah. I mean, I wonder, do you know what the story is around the name of Van Wilder? Just a made-up name, or is it?
Yeah, I don't know. It just sounds good.
Man, I might go watch that tonight, man. That was an old-school favorite film, when I was like 12 years old. So good.
Well, dude, Bilal, let me do a plug for Barely AI. I had to create a special code for our listeners. We probably should put this at the beginning. We have 69 of these coupons, people.
Oh, here we go.
NIA 150. The code is NIA 150. So it's 25% off the annual plan. There's 69 of them. Go get them.
How much is it? How much is it per year?
250 to 150. So it's go 200 a year. So this is 150 a year.
Oh, damn.
And we just added GPT-4. So go have fun.
Can we talk about it real quick? What's your experience been like from your side with GPT-4 versus what it was like before?
There are certain. So we've talked because GPT-4 is quite a bit more expensive. Yeah, I don't know if you remember this, but OpenAI dropped the price. No, so they went from GPT-3 went to GPT 3.5, which powered ChatGPT, and they basically dropped the price 10 times. So we're like, oh, and I know the listeners are like, I got a bunch of tweets like, hey man, does that mean the price of your service is gonna drop by 10? It's like, no, bro, it means we're gonna give you way more stuff, bros and sisters. We're gonna give you way more stuff.
Okay.
We're raising the caps, which is what we did big time, and people were very appreciative of that. But GPT-4 is now even more expensive than pre-price drop.
Oh, got it. Okay.
Yeah. But there are certain use cases for GPT. Yeah. So, I mean, there's some things that you can do GPT-4, which is insane. You can ingest 25,000 words in one go. It's like, that's it. You can take 25,000 words and be like, hey, summarize this, or like, write me like a concise 300-word thing that I can bring to my my manager or my boss based on this 25,000 words, or whatever you think is. And so I think that's one of the biggest things. You can ingest way more.
Since we're talking about it, since we've got a couple of minutes here, did you see the Microsoft Office integration stuff? What do you think of that?
As a person trying to build a productivity tool on top of OpenAI, it's extremely annoying when Microsoft does that. I want to be straight, right? But now I get to taste what people in the tech industry have tasted for 40 years, and like peak peak Bill Gates in the 90s, just stepping over everyone, right?
Yeah, fair.
No, but I'll say this, like, look, if Slack, a $30 billion company, can get clapped by Microsoft, like little barely AI and Trung, like, I get it. I could take a small hit. But the point being this, though, is like, I'm not worried. We talked about it before. It's like, there's a billion plus Microsoft 365 users. Well, that means there's still like 4 or 5 billion people not using it, right?
Yeah.
And that's who I'm there to serve. And we're building a UX that a lot of people love. And we're building a UX that fits into any workflow, not just Microsoft. And, you know, it's free. Just try it out and you get this fresh coupon, NIA 150.
What was it, NIA 150 you said? Oh, you cut off. I think you said NIA 150. We'll share it in the show notes. So, Trung, you cut off there. Say that lastly, NIA 150?
Yeah, NIA 150.
Cool. Share the link with us so we can put it in the show notes as well so people can go try that out.
Beautiful.
69 coupons. There we go. And yeah, that's another episode. Fingers crossed Jack will be back next week. Let us know what you think of this one. We appreciate all the support and we'll see you guys next week. Cheers.
Yeah, thank you so much.